They're always great to get your take on what the future looks like for us. We drilled into the numbers, and you talk about the private sector, and I suppose this is the big risk. Farouk was just talking about it there, about capital. The private sector share of energy investment is going to drop by 20% this year versus 22% last year. What are the biggest risks from that dissipation of private sector investment?
Hello, good morning, Manus. Good morning, Yusuf. I'm so glad to be with you this morning. We've noticed a major, actually, potential decrease in private investments in the energy sector, indeed. And that's not. I don't think that's something that is primarily relevant in the region, because in this region, this crisis came at a time where the private sector was definitely feeble and quite unsure at this stage.
Leila, today is a landmark moment, or the last 24 hours have been, because you had Saudi Aramco executing the acquisition of a 70% stake in Saudi Basic Industries, block trades worth $69 billion. Huge transaction, but maybe a bit of a scene setter of what is to come in terms of mergers, in terms of acquisitions.
Right. I mean, it's good that you are reminding us of that acquisition, but that's something that was in the cards before the current crisis. I think what 2020 is bringing us is a global reset. You will have to expect a restructuring of the value chains, I would say, in favor of the producers, which are in the best fiscal position, and Saudi Arabia, Saudi Aramco, and others are definitely in that position. And also the players that are facing the least leverage, that entered 2020 with the least leverage. That's definitely something that we are looking at. And these would be also the same players that would be the best targets in terms of acquisitions. So you would have in the energy sector overall, and the associated, I would say, petrochemicals and service sectors as well, more pressure to preserve long-term value proposition, to increase to preserve dividends as well. So that explains the potential wave of mergers and acquisitions that we can see, which are due to the 2020 crisis. As we mentioned in our report, I mean, investments are being cut, and that's something that is, I would say, quite similar to what we've seen in the previous downturns. The only difference this year is it started in the first right away back in the 2014-2016 downturn. If you remember, Yusuf, it took a couple of years to see those decrease of 25% year on year in capital investment. This year we are seeing the hit globally in 2020, and in the region, the oil and gas sector is the one taking most of the major hits, because in theory you would see utilities and renewables taking the most hit, but this year the upstream, I would say, and some of the downstream part of the business would take most of the hit. We might see in
Leila,
other
can I just ask you on that line of thought on M&A? How radical could it be? Because typically this M&A upstream and downstream is within borders. It is within national parameters to deliver those efficiencies through M&A. What is the probability of something much more radical happening and cross-border M&A within oil and gas going forward as a result of the pressure from COVID this year?
That's a great question, Manus. I think the probability is higher, and that's something that we have been tracking last year, actually, before the COVID-19 crisis started, because we already started to see the change of the nature of the relationship between institutional investors as a whole, including the largest ones, like the sovereign wealth funds, and the energy sector. So the energy sector as a whole is coming to 2020 with squeezed margins across the value chain. I mean, I can give you the example of less than 10% is a specific part of the gas value chain, for example, where we can still see robust fundamentals and robust demand going forward. And also the fact that the energy sector over the last decade has been delivering very, very low returns to investors and shareholders compared to other sectors. So I wouldn't be surprised if you see, definitely including cross-borders M&As in the future, and the emergence of new business models. Because I think post-COVID-19, one thing that we learned is specialization would not be the right business strategy to go for, and a bit more diversification and integration across the value chain to be able to balance the risks and have a counter-cyclical value chain. So you will see the emergence of larger players, more integrated and ready to capture, I would say, the carbon war that you will get after COVID-19.
Leila, if I could just jump in here and get you to respond as well to some of the movements we're seeing in LNG, because producers there are going to be busy over the next few years negotiating new extensions for supply contracts. What is it that they need to do to actually be able to attract buyers?
To attract who? I didn't hear.
Buyers. Attract buyers.
I think, thanks, Yusuf. I think it's an excellent question that leads us to the differences between the different players. And in the gas sector is definitely relevant. And I think that's some of the same dynamics that you see if you look at how the economies are doing across the producers and consumers. So in the MENA region, if I wanted to take that example, you would, and across the emerging markets, we see some of the same dynamics happening. So you would have the difference between the players like Qatar and Algeria, which has in the past tried to achieve a balance between LNG exports and pipeline exports. But as you rightly pointed out, is coming into a wave of a renegotiation of its contracts. But in the meantime, you have large players like Qatar and others who are coming to the market with additional, I would say, LNG capacities at low cost. Again, I think a lot of the restructuring and the change in that specific market as well will happen over the next 2 to 3 years, because you will have some players that would be well positioned because they are low cost and low carbon, given that it's natural gas, compared to others which have to face higher costs. And that's something that we see in our investments outlook as well. Gas is the only part of the value chain in a decrease in terms of investments in the next 5 years.